Well, last week commodities turned in a dismal performance in response to the Federal Reserve's negative outlook on growth. However, there are those in the sector which say that toward the end of the year, limited increase in supply will support prices. For some further analysis on the commodities sector, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney. How are you?
Now, do you think the commodities sector will recover from its recent dire performance?
Oh, look, Whitney, it has to, really, because when you look at where we are, what we're seeing is just a reassessment of where the economies are actually at. So at the end of the day, they will pick up. This is just coming back to a little bit of value based on what the economies are doing, but at the end of the day, they will pick up.
Was there anything else behind the pullback, or was it just the sentiment out from the Federal Reserve?
Whitney, I think it's just the general sentiment. It's the sentiment from the Federal Reserve and also the fact that we're getting that data coming through that is not supporting that ability for the economies to continue that strength. And I guess when you look at it, you really need to see a follow-through of economic data to conclude that we are coming out of this slowdown. And that's what we really need to see, good positive data that will reverse what the Fed has actually said.
Well, many analysts don't anticipate that we will see that for any time soon, so won't that continue to weigh on commodities?
Look, I tend to disagree with a lot of people in that respect, mainly because when I look at where we are placed in the region, Europe and the US might continue to slow down, but in our area it's going to continue to grow, particularly in Asia, particularly with China. So I think if we're still too US-centric and Euro-centric, then it's a concern. But commodities, demand for commodities, particularly out of China and Asia, will continue to be strong, and I think will be supported on the back of that.
All right, Jonathan Barratt, I'll get to a focus on the region in a moment, but let's look at the commodities in general. What will be the star players there?
Look, I think generally, Whitney, it'll generally be the energy sector, which I think is coming to a good low, and also some of your other primary imports, coal and iron ore, because I believe that these are the materials, the primary inputs, which are needed for those economies to break from third world into more progressive economies.
All right, now, if we look at the region, where do you expect the biggest growth pockets to be?
Look, I think you've really got to look at China again. China has an interesting situation because they've got such a large population. They actually require that massive amounts of infrastructure, which they didn't have before, and they've progressively been doing it over the years. So I think China will continue to be the supporting bloc, I guess, in terms of the economies in Asia. So I think from a regional perspective, I would still continue to focus on China, even though we might be going through a slowing down period.
All right, well, let's look at India. Now, its steel consumption is about 32% annually, which is where China was about a decade ago. So is India set to boom like China?
Well, that's the interesting thing, Whitney. You are right with what you're saying. As the economies start to move up, in terms of their progressive nature, they do require more. So I think India is as progressive as China. And if you notice that Tata Steel's output of steel has trebled, I think it will continue over time as they need that infrastructure to allow their economies to be more progressive. So yes, I think India will be continue support in the Asian region for growth and hence for demand for primary imports.
So then, as India starts to boom and China continues solid growth, which is what you're saying, how competitive will prices for coking coal and iron ore be then?
Well, I think when you look at that, they will continue to be progressive. The pricing will be there, and it'll always be a condition on supply. If we've got the supply to meet the demand, then the price should be okay. If we've got concerns on supply, then you will find that there will be an issue and prices will continue to trade higher. Once you decide that the economy is going to be progressive, you can't hold back on primary inputs, and that's one of the keys, because if you can't hold back, and as a result of that, if you have a supply issue, then prices will continue to trade higher.
All right, and speaking of supply, of course, we saw Russia's ban on wheat exports was put in place just recently. That will obviously help boost wheat prices for the rest of the year.
Winnie, I think that'll create a floor for the wheat prices. Remember, with what's happening in Russia, we'll probably only lose about 2.5% to 3%. I think there's been a lot of hype over the concern, but I don't see it sustainable. In fact, I feel that prices for wheat have in fact reached their high, but I think we have found a floor in the price of wheat.
So you subscribe to the theory then that there are enough stockpiles out there that countries can revert to those?
Oh, yeah, absolutely. No problems there. The US have got enough stock on. Their stockpiles are up to 24-year highs. So you're losing wheat in one region, you've got enough in the other region, so it'll just increase the export market for America, but also for Australia as well.
All right, now, Jonathan Barratt, we're nearly out of time, but I do want to touch on this. Finally, let's look at gold. It surged around June due to those sovereign debt issues. Some analysts are predicting it will stage another rally and will hit $1,300 an ounce in the next 6 months. What do you say to that?
Yeah, I'm actually quite supportive of gold. What we're seeing, I think, is traditional buying, physical demand, Indian wedding season and the build-up for Christmas. But we're also seeing a little bit of sneak of inflation starting to appear. We've noticed that in the data, and I think that if that continues, people will move to gold as a bit of an inflation hedge. So yes, I'm supportive of that. Whether it reaches 1,300 is another thing, but certainly back through those old highs, I'd certainly think it's not a bad bet.
All right, Jonathan Barratt, we'll have to leave it there. Thanks for joining the program.
Thanks, Whitney.